Hello, everyone. I hope you can hear me. This is the second subtopic under Part 1, Section E of the CMA syllabus, which is all about internal controls. So this subtopic talks about the internal control policies for safeguarding and assurance, and we will also insert the internal control risk, which is part of the overall audit risk. So let's talk about the types and methods of internal control policies that the companies use in order to safeguard its assets and to provide reasonable assurance that is relevant to the conduct of the audit. So organizations rely on both voluntary compliance and a variety of controls that require or force compliance to at least some degree. So there are 5 basic types of internal controls. The first one is what we call the preventive controls. So from the term itself, preventive, this help prevent errors and misappropriation of assets. So example, a control may create an obstacle that prevents the processing of a particular type of transaction. So for example, if you do not have any authorization to process this particular type of transaction, the preventive control is there in the system, which will prohibit you from accessing such function. So for example, you are assigned to perform tasks related to accounts receivable, so you cannot access the payroll system, for example. So that type of control is an example of a preventive control. Oops. Okay. I'm actually trying to do annotation for a while. Okay. Okay. Okay, another example of a preventive control is your credit checks. So credit checks on existing and potential clients to prevent sales to clients with poor credit rating. So for example, if we have a new client and that client or that customer wants to purchase goods from us on credit, so ganahan siya mangutang. So before we grant that transaction, we have to study first the credit history of the client. So if this particular client has a poor credit history, then as part of our authorization process, we will decline the request of the client to grant credit. So that is an example of preventive control. It prevents us from granting or authorizing a transaction, a credit transaction that would be very detrimental on the part of the company, because if we are to grant this this transaction which the customer or the client wants to purchase something from us on credit, pero nada siya history of not paying purchases on credit, so that would be very detrimental to the company. So as a way to prevent that, we have to perform credit checks. So credit checks is an example of a preventive control. Another example of preventive control, guards at exit points to prevent employee theft. So if we have significant inventories, we have to post some guards sa entrance, both entrance and exit. For the exit part, this actually prevents our employees, even though they are, for example, they are authorized to enter the warehouse. So let's say employee gid siya, legit siya employee, so he can enter the warehouse. But in order to prevent that certain employee from taking or stealing inventory from the warehouse, nata ibutang nga guard sa exit points to make sure nga iya pong pagkapkapon ba niya, or the guard, the security guard will have to make sure that the employee is not holding anything coming from the warehouse. So that is type of preventive control. Transactional controls are a specific type of preventive control designed to ensure that every transaction is documented, that false transactions are not entered into the system, and that all valid exchanges are recorded accurately. So transaction controls, very, very much important, and this is a type of preventive control. The types of controls selected depend on the quantity and the nature of the transactions that the firm completes. So of course, if you are a small firm or small company, you're not expected to implement several preventive controls. Like for example, you don't have any inventory because you are into the provision of services. Ang inyong business is maghatag mog service. So since wala man mo inventories, then most likely kaning, let's say kaning guards at exit points, this is not applicable to your business. So the types of control will actually depend on the nature of your business and the quantity or the volume of transactions that you are dealing with. Preventive controls that depend on functions or people performing the roles effectively may include separation of duties. So if you separate a specific duty from another duty, then that's actually a preventive control. It prevents the performance of a fraudulent transaction. Then supervisory review, such as a supervisor approving a purchase transaction. So this is actually a broad example pod of separation of duties. Now, kinsa ang mo perform sa transaction, lahi sa mo approve sa transaction. Dual control, such as 2 authorizations for every transaction above a certain threshold. So for example, for very huge disbursements of money, let's say over 500,000. So kung lapas 500,000 ang bayro nun, let's say ato ang ibutang diri sa atong firm nga dapat na ay pirma sa ato ang treasurer at the same time na ay pirma sa ato ang president. So duha ka box signatories. But for transactions nga gamay lang og amount, pwede ra si treasurer. But if dako gani kayo, say lapas og 500,000, then kailangan siya og additional signatory, let's say for example the president. Edit and accuracy checks, such as reconciling invoice amounts against original warehouse receipt records before an invoice is paid. So you have to verify, you have to reconcile different documents to make sure that the amounts and quantities found in this document is the same with that of the other document. Reasonableness checks, such as verifying the total of transaction against a customer's credit limit. Reasonableness checks often are built into software systems. So if your company is using computer systems or software applications that are already installed in the laptops or the computers that the employees are using, so kani siya nga mga checks o sahay embedded na siya sa system. So therefore, we don't need to actually remember it and perform it manually. It will be the system that will prompt us nga, oy, na ay inami nga transaction. Completeness checks, such as a computer form that will not allow the operator to continue until required fields are completed. So for remember mo na if you are required to fill in your details and then I asterisk, for example. So if na asterisk na siya nga field, that means that the field is required, so it cannot be left blank. That is also part of preventive control in a sense na mo prevent siya nga maka-enter ta og transaction nga kuwang og details. So example, if a data entry screen insists on complete fields before it permits processing, the screen itself operates as a preventive control to ensure completeness. So as with internal control in general, no firm can expect its preventive controls to be foolproof. So even though imo na ning gi-install tanan, imo na ning gi-implement nga mga controls, it will not give us a guarantee nga wala joy makalusot nga mga errors or mga fraudulent transactions. So thus, it is important for a firm to recognize the dependence of preventive controls on detective controls. So the second type, so the first one, we have preventive control. The second basic type of internal control is what we refer to as detective controls. So, kani i-prevent, so first hand pa lang daan gitug nga na niya. So katong makalusot despite implementation of preventive controls, we should be able to detect them. So detective controls actually back up preventive controls by detecting errors once they occur. So example, performance of reconciliation of bank statements. This is an example of a detective control, particularly over cash assets. Detective controls complement preventive controls and are essential components of a well-designed control system. So they work hand in hand. In some cases, detective controls that examine random transactions may be less expensive than preventive controls that must check every transaction. So if you are to choose between detective controls and preventive controls, mas maayo cost-wise, no? Cost-wise, mas sayon i-implement ang detective controls as compared to preventive controls, because ang role manggo ni detective controls is just to look for suspicious nga mga items. So dili tanan tan-aw. Ang iyang i-highlight is katong mga suspicious, but for preventive controls, every transaction jud, the entire 100% population sa ato ang transactions will go through the preventive control. So that's why cost-wise, mas favorable si detective controls. Okay, the third type of internal control is what we call corrective controls. So problems are identified using detective controls, right? So si detective controls will detect, and then siya point out nga, uy, there is something wrong with this. But we do not stop there, di ba? We do not stop with pointing out nga, uy, sayop ni. So mo proceed to correct that. So the corrective controls are there to correct the problems that are identified using our detective controls. So example, an ordering system's routine edit function may detect an inaccurate account number on a sales order, read the client's name, search the database for the correct account number, and correct the original record. So this is particularly useful if we are using software applications, because si computer na jud ang mubuhat ani, no? Makadetect siya no nga sayop ang account number, let's say Mr. A, ang na-input dito nga number lahi sa iyang account number gyud nga naka-save sa ato ang database. So i-correct na lang niya. In some cases, if a record cannot be found in the database, the computer may generate an error report which an employee can use to resolve the discrepancy. So for example, Mr. A, wala pa siya na-exist sa atong database. So in that case, unsa man ang buhaton ni employee. So si employee can decide how to resolve this. For example, the employee may want to generate a new account number for this new client na wala pa makitaan sa database. Another type of internal control is what we call directive controls. So in contrast to controls that prevent, detect, and correct negative results, directive controls are instructions designed to produce positive results. So katos na lang first three, they are more focused on negative. No? So for directive, the directive controls are more focused on producing positive results. So example, a firm may have a policy to use local vendors as often as possible as compared to overseas vendors or overseas suppliers, because in this case, if our suppliers are within the local area lang, this might shorten the lead time, and then mas paspas ang communication, and then mas paspas ma-rectify ang errors if any. Directive controls may be intended to create a favorable image for the company in the community. And the last type of internal control is what we call compensating controls. So compensating controls are also called mitigating controls. So these two are the same. These controls compensate for the shortcomings elsewhere in the control structure. So for example, having a bank reconciliation done by someone who is independent of accounting and cash handling can compensate for a number of flaws in the controls over cash transactions. So for example, sorry ha, defective ako mouse. For example, instead of separating the duties for cash handling and cash reporting, kasi supposedly, di ba, two different persons should perform the cash handling or cash custody and another person for the cash recording. But if ever we cannot afford hiring two employees to perform these two tasks, then gi-merge nimo siya into one employee. To compensate this shortcoming, we can perform bank reconciliation. So bank reconciliation is actually a form of a compensating control. Another one is if we have a hands-on owner-manager supervision. So if there are rules on segregation of duties that were not strictly followed, but naaman sad si owner dira, nag-manage, nag-oversee sa operations, then that could minimize the opportunity for perpetrating fraud, the perpetration of fraud by our employees. So despite not having strictly complied with segregation of duties, but the mere fact nga na si owner dito nag-supervise siya per me, then most likely maglisod gihapon og perpetrate of fraud ang mga employees. So compensating controls limit risk exposure, which must be analyzed in the context of bad outcomes that could happen given particular system weaknesses. However, compensating controls are sometimes redundant. So example, data entry verification can be achieved by having two entry points, reconciling these records, and generating an exceptions report on any detected differences. Okay, so remember these 5 types of internal controls. Now, having known these type of internal controls, the next question to be answered is, how are we able to implement? How are we able to implement these internal controls? So the how question actually refers to the methods. So methods on how the different types of controls can be employed. So we have 5 categories for the methods. So we have organizational controls, operational controls, controls for personal management or people or HR controls. We have review controls, and then controls for facilities and equipment. So first, let's look at organizational controls. So this establishes the statement of purpose, authority, responsibility for each division in the company, such as decision authority and reporting responsibilities. So if you go back to the elements of control, now we have the control environment. So this actually refers to the organizational controls. This sets the tone. And then we have operational controls. This include activities such as planning, budgeting, documentation, and controls for the accounting and information systems. And then we have people or HR controls. This include recruitment and selection of employees, orientation, training and development, and supervision. Competent and trustworthy employees combined with timely and effective training minimize the need for corrective control. So if we at the first instance, if we are to pick very competent individuals, no nindot ato ang hiring process, nindot ato ang selection process, then we can make sure that these new hires are competent enough to perform their tasks. In effect, or as a result, dili na ta magsige og correct sa ilang mga sayop, because at the first instance we know that they are competent. And then we have review controls. This includes regular employee reviews as well as regular reviews of ongoing operations and projects. So after a specific lapse of time, we can perform our review on what we did and what happened, so that we can see, we can compare we can compare the actual results from what we have expected, and then point out nga nganong lahi man ang actual sa ato ang giplano or gi-expect. So this may include external audits, internal audits conducted by employees, independent of accounting, management reviews, audit committee reviews, and activities of a disclosure committee chartered to ensure compliance with Sarbanes-Oxley. So Sarbanes-Oxley Act is actually not a Philippine law, but is very much used also here in the Philippines. So since we do not have a counterpart for the Sarbanes-Oxley Act, this Sarbanes-Oxley Act is actually very useful for internal controls and corporate governance. So although we don't have a counterpart here in the Philippines, we still use the concepts and the provisions found on the Sarbanes-Oxley Act. So review controls are also referred to as monitoring controls. And then the last method is controls for facilities and equipment. So this includes security systems, fire and smoke alarms, and permanent ID markers on equipment. So from the term itself, for facilities and equipment, these are the controls that we implement in order to safeguard our facilities and equipment. So we install security systems, mga smoke alarms, okay? And then ID markers and equipment para sa yun lang inig mag-inventory ta sa atong mga equipment to make sure nga wala na nga wagtang. Control procedures such as standards for design, cleaning, and repair and maintenance schedules protect the firm's fixed assets. Okay, the key control and goal, safeguarding assets. Internal controls, which are designed to protect the firm's assets, are often the most visible controls because those controls, diba, to protect the firm's assets, and the firm's assets are very much also visible to our eyes. So kita kag equipment din ha, kung unsa ang control nga gi-implement to safeguard such equipment, klaro pud kaayo sa ato. Such controls include door locks, no, di ka pwede musud, security systems, computer passwords, and requirements for dual control of valuable assets. So assets, as we all know, can be stolen, misused, or accidentally destroyed unless protected by adequate control. So that is why the safeguarding of assets is a major and key control and goal of the company. Controls for safeguarding assets include segregation of functions in processing transactions. Example, the people who writes up an order should not have access to the assets for fulfillment of the order. So for example, every time na mo order sa atua, ang person nga mo prepare sa purchase order must not be the same person nga mo adto sa warehouse o makuha sa inventory. Dapat separate yun na sila nga persons. Multiple levels of access controls should be built into an organization's operations and information systems. Example, users with authority to arrange shipments are able to update the inventory system, but sales staff is given read-only access to the data. So this still revolves around segregation of duties. And then we have people or human resource controls. These are also very important controls that we need to look into. Okay, so of course we cannot do away with people. No, although we use computers nowadays, we still have to employ human beings, right? So as part of a firm's internal control procedures, we may have to use methods of internal control in the process of hiring, evaluating, and training our employees. So these are the controls that we can use particularly to people. So first, recruiting, selecting, hiring, and supervising quality people. So this is actually common sense, no? If we are to hire quality people at the first instance, then we can expect lesser problems later on. So we need to make sure that the recruitment and selection process is well defined. So for example, we might perform references. What happened? Reference, security checks, mo nang usahay mga yun, tag NBI clearance, drug testing if needed, jud. Okay, to make sure that we are really hiring quality people. And then orientation, training, development, and performance review. This pertains to the existing employees. So current employees na to, dapat dili po na to sila pabayaan. No, we need to train them, we need to develop their skills, and we need to periodically review their performance. And then bonding, rotation, and vacations. So we need to also enforce forced vacations. We need also to bond. We need to have our employees. We need to cultivate our interpersonal relationships with our employees. We can also do rotations of duties, and then we can require each employee to take vacations. This is a way to help ensure that an employee has not compromised the controls. Okay, for a while. Okay, thanks for waiting. So at this point, let's look at the internal control risk as part of the overall audit risk. So we all know that the audit risk is composed of three elements. We have the inherent risk, we have the control risk, and the detection risk. So control risk or the internal control risk is one of the three components of the audit risk. So just a quick recap, inherent risk is uncontrollable, meaning it's always there. We cannot influence it. Control risk is the risk that comes with the existing internal controls of the company that we are auditing, for example. So the assessment of control risk is very much important because the work of the auditor, the remote detection risk, will be dependent on the assessment of the control risk. So for example, di ba naghiskot naman tag mga controls ganina. So if gamay lang nga mga controls ang gi-implement sa company or none at all, that means that the control risk is very high. Very, very high. So if the control risk is high, detection risk should be low, because the relationship between the control risk and detection risk is inverse. So meaning they move in separate ways. If control risk is high, detection risk should be low. If control risk is low, detection risk could be high. So what does it mean? What does it mean? If control risk is high, detection risk is low. Kung may detection risk is low, dapat gamay ra og chance nga masayop si auditor. So para mas gamay og chance nga masayop si auditor, the scope of work that should be done by the auditor should be broad. Dapat daghan buhaton si auditor para assure niya nga gamay ra ang iyang errors or gamay ra ang sayop ni auditors in the conduct of audit. But if the control risk is low, detection risk is could be high. So if detection risk is high because gamay lang ang control risk, ang pasabutan ng gamay ang control risk, that means the internal controls of the company is operating very good, no, very effective. So control risk is low. So that means detection risk could be high. That means that the auditor's scope of work may be lessened. Okay, so mo na siya ang relevance and control risk to the detection risk. So I have here an explanation that you can see if visual mo nga person. So it's here, but it's basically what I have mentioned. Sige, thank you for listening, and then you can move on to the next topic.